Oh, yo, 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 yo. Time for the live stream. Time for entertainment. For great life. Um, do I want to do synthetics? Do I want to do gold and all that other shit? Yeah, fuck it. I haven't looked at these, you know, Solana, Ethereum, so forth in a while. So, purpose of this is just to reiterate what Michael was saying regarding asset classes. I think trading now, from my perspective, it's not. Well, no, sorry. It's more about um, being safe. Basically, like what can you trade that's going to not give you a guarantee of returns or whatever the fuck, but like hope to an extent. Well, not hope. Hope again. That's the wrong word. So remove all of these drawings. Sorry. Let me change the screen thing to trading view. All right. Cool. So we are now together. So the big thing that I've seen with all of my trades that I keep making the terrible mistake, and I don't know what is wrong with me, because I know I'm gonna make these mistakes. I mean, sometimes like I show up fucking high or I'm drunk, and I want to go and trade, and yeah, like at times it goes well, and I'll be like, you see, it doesn't matter, yada yada yada. So, but anyways, one of the first things I want to get onto is, or I'll list it here. What I'll talk about, it's wicks or gaps, um, closes, sorry, no, focus on bodies, and what else was it? Then obviously my models. What are them? It's IFVG and OB. Uh, what else is it? It's a change in the state of delivery, and then it's a breaker. Any PV flip combined with a fair value gap in a discount. But the golden rule is that with all of this, it needs to target something. All right. So you got to say here that I need to target an unfilled fair value gap or PD low. Right. These are the rules. It's established. So I don't trade crypto, but I need to get into it because I was told about this thing months ago, already around June and all. And if I look at as far as it up, man, I mean, if I was saving my money in this crypto and say I had 2, 3, 4 grand in savings, I mean, think of how much it would have climbed. Say, had I been adding to, had I been building the position, even if I had bought here, yes, you go through this terrible downturn, but you're not risking all of your money. Like you're not going balls to the wall. So, okay. So, anyways, rules have been established, right? As in, that's what I'm doing. So, if I were to go to the daily chart now, and we'll do a few of these now, it's when price makes these fair value gaps like such, I have found many a time that it's easier to trade the move up into it than the one coming down, because when it reverses, I always think, oh, but it maybe wants to reach higher. Because if I look at these up close candles, yes, now obviously it makes sense, but look at this body, right? Price never actually trades to the body low, but it trades to the wick low, as well as um, this wick low, okay? So it gets you thinking now, right? Cool. So there's a gap here. We close past it in one move, right? If you're on the daily time frame, and it's again now I use the word a lot, but it's another realization because every single time I'm trading, even with synthetic indices, on the higher time frames, and say like the 1 minute, price doesn't really come back all that much. Oh dear, hearing fire trucks and police already. That's encouraging. So you see that, right? So price comes back to the body low. So now you're thinking to yourself, cool. Hold on. This song is amazing, man. Right? So focusing on this day. I want to see how this day, when it closing lower, how it reacted to this level here. Um, and also, I mean, if you do look at it in within this range here, and I'll use this within this range, um, the highest up close candle is these two series, right? So it's two. So I would have wanted price to come back there, but anyways, it doesn't. But now I would go to the, I would even beg to say the 5 minute and say, cool, where was the reaction off of it? Was it within London session or oh you see that right in the London kill zone? We make this change instead of you see here. It's weird how price works. The nature. See here, we make a lowest down close candle within this range here. We close past it in one move. We don't come back to the wick high, nor do we come back to the body. However, these former up close candles, we close past their body lows, but we don't come back to, well, price only comes back to the wick highs. We run higher, create one fair value gap here. We don't, you see here, we close, we move up again in one move. There's no sort of retracement, but this whole move higher. Now, right? As you've now mentioned, this is now technically a period range which I should be shorting, right? But I don't in this entire move here, right? The only possible thing I'd say of, oh, let me short is because we have this high that we failed to close above, all right? And if we use that high as, like we're saying, our wicks or gaps, so we close past the consequent encroachment level, right? Versus, say, if you were to compare the bottom side of this gap initially, we did no such thing. So we what overcome the candle and completely. So now it's like, would there be say maybe a 1 minute entry model back there? Because on the 3 minute, unless I'm using that whole wick thing, which is nothing that I actually trade with, it's not even a model. So I'm not trying to cherry pick levels here. You see here, we make this bearish propulsion block, but we do not close past this BPR and this fair value gap here. Runs higher, this changes the state of delivery, delivers lower, then we just get one quick close. And there's not a single, well, I guess this candle here is a kind of a, no, dude, sorry, there's not a, yes, but this is like the doji, so the market just runs down lower. So my So now I've got to ask myself now. I would basically be have come on behalf. I would be, I would have to be willing. All right, this is a 3 minute here. You see this here, and a down close candle we close above it. So like it doesn't return to the fucking bodies, dude. But what is it interacting with here? We close past the body. I mean, you don't even come back to this highest up close candle because it's now a series of up close candles. So if you use this now long as wick, like so me saying that the market is kind of running away from me in these instances because this is now like let's say if I can go back to the 5 minute now. If I found a way to justify this entry and saying, okay, cool, the candle based on this wick here, because it's formed a high. If close past the concept encroachment, I'm gonna go short there with my stops and spread above, and you're looking for say, right, that's easily a 1 to 5 already. Then you have one of these here, 1 to 8. You could have, if you added say, you say okay cool, so any because this is the model you've traded, a wick like this, say this gap here, you close past it, you return up to it, you short it also because of the inversion here, and this one. I mean, if you want a more solid one, you could, literally take this one, or like the gaps are quite endless, man. Fuck off. You see how I could make what about 10 R just on this alone, all right? Now, my issue and my big problem becomes I see this close, I don't get in. You see it drop down here, you're like, oh, but now it's too far gone. I'm only gonna make 1 R or so. And it closes here, suddenly your 1 R's become 0.8 R. Then you start seeing these big wicks and you're like, oh no, the market's not gonna be in my favor. And then voila, completely fucked over. Right? And if you are able to make, I have to buy this premium thing. If I'm able to make, say like a trade like this, right? I make 9 R. And so imagine, right, I'm trading a funded account. I'm risking 1%. I just made 9% of my of an account. Let's say I've got a 10K account, right? 900 US dollars. Let's round it up. Let's say I'm at 10%. I'm at $1,000. After my profit split, 800, 14,000 rand, right? Okay. But now let's say I was now being a very confident person regarding these shorts and these longs. And let's imagine now. So it's the market needs to fail to close past a previous high after trading above it, then close below the consequent encroachment of the wick if there is one. But it's got to be say like a down close candle or whatever. Okay, let's just use the consequent encroachment, right? Let's ignore up close and down close candle. So now you got to look at every single failed kind of swing. So let's take like this candle here, right? You see this bottom wick. Ah, shit, that's the wrong tool, right? You see this here. We trade down to it once, twice. We close here. We close past consequent encroachment. But you see right here, no low was swept. I mean, I'm being dumb. It's nothing. Ah, shit. See, sorry. This mouse is so sensitive. It's a gaming mouse. Um, but anyways, right? You look at this. So like this low, all right? Well, what does the market do by it? Closes right there. Now you'd have to go into the, because think of it, it is a swing low, and it's got a wick. So you've got to mark your consequent encroachment there. You've got your you've got your fair value gap low here. your best, sorry, then this wick here, all right? Is there, like over here, like I'm cherry picking? Think of it. Super high, close past the constant encouragement level, there's a short. Is there the same thing here? No. Yes, the low gets up, but it just trades into a busy. So the model isn't here. So I'm obviously thinking about it's not going to be 1,000%, 100%, right? Um, See how like look, it's not showing up over here. We sweep it, close past consequent encouragement level, trade back lower. We reject off of these quarter levels. And what also is it? So if one was actually good at trading and knew how to snipe and was genuinely a precision technician, a trade like this, mind you, we'd be talking about note how price, rejects that level, 5R, and there's the opportunity to build into the position. Anyways, I'm going on. I have to go and sleep soon, so let's go on to the 1 hour quickly. All right. To show the thing about inversion fair value gaps uh, that I also saw in the live streams and the videos of Michael that I'm watching. All right. So this is the lowest down close candle, but it's a series of it. Okay. So this is your order block. All right. There. Cool. That's the order block. This has wicks. Cool. That's been established. This up close candle was once, at some point, one would have seen it as a bearish propulsion block. So its open is also then duly noted. Sorry, its body close here, so that high of the body, you have this unfold fair value gap, right? Look at our price. Like, look here. When we close above it, we close above it with what? Kind of wicks, but it's a fairly strong body, and it closes and it kind of trades higher. How if I can spot a close, it's an inversion fair value gap. It broke structure, it broke this low and that low. You've got a bearish propulsion block flip, right? Which is say it's that this was at some point, it's a bearish prop block. We close above the high right over here, we reject this low, right? Would it be stupid to say once price closes past this high like that and trades back into this propulsion block, you just start building your position. You build it and you build it as much as you possibly can, while it's still within it, hoping it's obviously going to go higher. If it dumps way below, say the gap, cool, account is blown, so that $10 whatever that I was risking, or $5 or whatever funded account, the 1% is gone. But or you might even risk 2 or 3%. But within your head that as long as we do not close below the low, the market is still going to be in your favor. I mean, another thing that I saw on VIX this week that I'm only seeing now as well is look at this body. See how price never actually returned. This is a down close candle. When price made this inversion fair value gap here, this is the propulsion block it used. Well, not it used, but that was formed right before the down close candle. We come right back to it perfectly. So you have this forming, within that hour, and I will even so like that cool. This 1 hour candlestick cannot close below this low because otherwise longs have been invalidated. So think of it. This is your entry point. This is the best place, even if you're only targeting this high or say this unfold fair value gap, right? It doesn't seem like a whole lot, but I mean, let me draw the level out now quickly. So I'm not sure if because of this whole free plan, if the 1 minute buff, I should be able to just go back to on the 1 minute. Right there, that's the 1 hour gap. This is the body, right? Is this not some of the cleanest bullish change in the state of delivery? right here. Now tell me, is any sort of degree or anything, well I'm sure there are more entertaining things to do, but I'm saying money wise, 1 to 17 R could be possible from doing what? Watch the timing. Think of it. This 1 hour candle only closed here because it couldn't close below this line here. So where does it close? It closes here. Does what? It reaccumulates, right? Inversion fair value gap. Assuming this low, this is a breaker here as well. Sorry, no, sorry. Assuming this low, this series of upwards candles is the breaker. Do we close past the lows of it? No. Just simple perfection. So, funded account, I'm trading crypto. This would be 420, right? Let's just say I was up doing a late trading session, right? 1 to 17 R. Is it gonna happen all the time? So think of it. If one can take these trades and you're entering on the 1 minute on this 1 hour level here, knowing that this 1 hour ideally should deliver here. If it stops me out and I have to try again, then I try again. But say, okay, look, the 1 minute at times can be too good to be true. Let's say go to the 5 minute to see what sort of trade or opportunity could have been presented then. So let's remove this and we say, cool. So price trades to this low, the candle closes. What is the first thing we do regarding this wick here? Trade down to its quarter level. Don't get to the consequent encroachment of it. Close above here. Form this large top wick here. Then close past the consequent encroachment level. Eventually close past the positive block. Runs higher. This is on Solana, dude. I don't trade Solana. I don't backtest Solana. I think I might have put a trade behind it once, just trying to see like the whole contract size, but I've never actively gone out and wanted to actually trade this thing. And look at all it can give here. See what sucks about this one is lowest down close candle. We close past its high here and this bearish prop block. But look at the size of this bottom wick. We close past it. If you went long here, you would have been in serious drawdown, man. It would have scared you. But what ends up happening? Because if you try, because if I say, if I would have tried to use this down close candle, price never came back to it. This inversion fair value gap here, add. Prop block here, the wick, add. My days. So even now, if I have to go to the present time and sit here, knowing it's currently New York session, right? This candlestick is about to close soon, right? Just mark out what's already there. So you've noted that gap. You've noted this inversion fair value gap below here. Old bullish prop block. Thing is, as much as I want to stay and trade, I need to go and nap because I have to go to work. But this was the live stream.